In this video, guys, we'll look at total volume, or TVOL, and how we can use it to perhaps make better day trading decisions and swing trading decisions. Stay tuned. Hey guys, very warm welcome to you. Thank you for joining me. Okay, so total volume. I've got TradingView here, and we can find total volume with the code TVOL. But if you go in and start to type volume and select index, you're going to get a few. You've got NYSE up, down, NASDAQ up, NYSE total, NASDAQ down, loads of stuff here. What I'm using in this example is TVOL, and that's total volume. So that is telling me the total volume traded on the New York Stock Exchange. It's a funny looking chart, agree. I have an hourly time frame up. So each one of these candles, they are, kind of bars, doesn't really matter, is showing me how much volume is done in an hour. And of course it's compounding because it's just adding onto it and onto it and onto it. You can't get a declining volume because it's total volume. Most you can do is stay stagnant if no trades are taking place. So it's doing the total, really at participation, if you like, of people in equities. It doesn't take into account NASDAQ, but it's a good representation. So why do we want to use this? And by the way, we're not really looking, or we don't really care what this number is. We're looking at it in reference or relative to all the prior days. So for example, today, look at today. It's relatively low volume. The first hour was probably the lowest hour we've had for a while. Second hour again, and we're coming into a kind of the final hour, and we're quite down. We're not expecting to be up here. It's a quiet enough day. And actually, when you look at the candles, when you look at the chart today, very rotational type day, opened, push a little bit lower, push a little bit higher, very boring and very quiet. Okay, so what does that mean for us? Well, it means that, okay, am I really going to be pressing shorts into the close? If we start to push down here, would I really want to press a short? Probably not, because I don't think there's a higher time frame participation. I don't think that more people are eager to transact. There's not much transactions taking place. Everyone's really relatively happy with where their price is. There's no urgency. We're probably going to close around the VWAP. We're probably going to come back and close and settle around the VWAP. And I could trade around that if we kind of had a little bit of a tickle down lower here, which we have done on this 5-minute chart here. But maybe I could trade around that. Maybe I wouldn't trade around that. Whatever. The point is that I can start to frame an idea, intraday trading idea, around how much volume is being done, when compared to prior days. So I can go back and look and say, okay, well, actually look at this 11th. Big volume, and we're coming to the final hour. We've done most of the volume that we'd normally do on the day. We're still an hour to go. So I appreciate we've got some hindsight here, guys. I'm not going to kind of say this is a holy grail thing or anything like that, but we perhaps might be a little bit more inclined to, and then very least, not start looking for a pushback to the VWAP in the final hour, because volume is really high on the day. Relatively speaking, it's really high. A lot of people are transacting. So if you assume a lot of people are transacting, maybe we can assume that if people are going to increase that volume, or there's more volume going to be done still, which is quite a reasonable assumption to make, because algorithms especially will split things up into time and into volume to execute. So you can assume that theme of higher volume is probably going to continue throughout the day. Maybe then you'd start to press that short. Maybe then you at least wouldn't take the fade. Maybe then you'd start to take the breakout and think, well, the volume's there. We've got the volume in terms of transactional volume, and you can look at your ETF volume, whatever it may be. By the way, it's the S&P 500 ETF if you hadn't realized that already. So another example could be, all right, look at the 19th of June. What happened on the 19th of June? Huge volume in the first hour. Wow, something really significant's got to have happened in the first hour. Let's go and look at the daily. Let's take off VWAP because we're on the daily, and let's look at the 19th of June. So we go back and we go, where are we? 17th, 18th, 19th. Wow, big bearish engulfing. So obviously we gapped up, and then we sold off straight away. And so when you see that first hour, maybe you go, regardless of where we are in the kind of higher time frame, maybe from an intraday trader's perspective, you can go, you know what? Actually, maybe I want to be very careful. A lot of people are taking profits. I don't want to step in front of that train. Whereas if we'd have gapped up on the day and the volume had been relatively normal, then maybe you could have gone, you know what, maybe we're not going to fade it. So 1st of July, great example, gapped up on the day. Let's see what the volume's like on TVOL. And by the way, we're just looking back from a history perspective here. So 1st of July, here, look at this chart here, guys. We've got not a lot of volume, reasonable, but it's petering out. It's not huge. It's not like we had back in the 19th of June. So that might give you a hint in the first hour. You go, you know what, I'm not going to start fading this. It might be consolidating. It might be fine. You know, it looks to me like we're accepting that new level in price. You know, it looks like we're really kind of comfortable with that and everyone's happy, etc. Same here, 26th of June, the highest volume again. What's that looking like? Well, let's have a look, and this is when we can look at it from a swing trading perspective. Maybe that's the final flush. Maybe then the next day after you've seen, maybe look at a day two perspective. Okay, I've seen a big crescendo in volume. I've seen reasonable volume on the ETF or the product I'm trading, fine. But I've also seen good volume on the actual New York Stock Exchange, good flow of money going in. Next day, oh, we gap up a little bit. Okay, we've tested a look. Maybe that is a exhaustion, the final move. Maybe it's the start of a move. Again, this isn't the holy grail, but it tells you that something's happening. And when there's something happening of interest, it means generally you're going to get a range expansion. You're going to get some kind of move. You're going to get something happening. So you're at the very least, you're like easy with the mean reversion, easy looking for the rotations back to things. Let me see where I can best position for a bigger move. The volume's there. There's some transactions taking place. People obviously pretty interested in what's going on. Let me use that to my advantage. So that's TVOL, guys. Maybe it'll help you out. Like I say, if you're in trading view, it's TVOL, NYSE total volume, and play around with it. Have a little look, go back. You know, you can change the settings on this, hourly, 15-minute, whatever. But it's just and something else. Maybe you can add a little bit of extra to your edge with swing trading, day trading, especially obviously the US indices this applies to. Anyway, guys, take care. Don't forget to check out our channel sponsors. The link in the description below. I'll see you in the next one. Bye bye.